So today is CPI release, and we'll be expecting CPI data to be, announced around 1:30 p.m. GMT plus one. However, currently this is 7:47 a.m. my time zone. We have lots of time to prepare ahead of the CPI release, and generally, I feel the market is going to be a bit slow and quiet. Not until when we're approaching the CPI hours, we start to see some significant move in the market, and the CPI is supposed to unleash a major volatility in the market. However, generally speaking, CPI is one of those key major high impact news that traders look out for, and it has been very, very, very significant lately. We have NFP as one of also those major news that we look out for. NFP was last week, and we're having CPI this week and today, to be precise. So if you're new to the channel, make sure you subscribe, smash that notification button so that you will be notified each time we drop new major videos like this, and stay tuned to the end of this video. You don't want to miss anything. You want to make the most out of this news release. Let's get onto it. Alright guys, so what we want to do now is we want to break down the two aspects of what we are expecting, the fundamental side, then we'll come back to technical side, and we'll sum up what to expect by looking at these two aspects of what the dollar pairs are likely going to do today. And also we're going to look at the instruments which is going to likely have the most volatility. Remember, volatility is what is going to give us those gains in the market, and we want to be on the right side of this volatility. Another thing to note is you need to be flexible and open-minded. This is a kind of news release that will make crazy impact in the market. However, for starters, if you are not used to trading high impact news like this, you want to possibly be on the sidelines and observe how it's going to play out. However, there's another side of things which you could take in a little bit risk, that you would narrow down on your risk if you're the kind of person that is used to taking, let's say, one lot size. But because this is a high impact news and you're not so confident with what's about to be announced, or you're not so confident with the print for today, what we want to do is we want to be on the defensive side and still participate in the market. All right, let's move over to our screen now and take a look at what do we have here. Right, so for the CPI print we're looking at today, we're expecting the news announcement to be dropped around 1:30 p.m. my time zone. So first things first, we want to break down what we have. So CPI usually comes out with three major datas: the core CPI M/M, the CPI M/M, and then the CPI Y/Y. Now there's a bonus info that we're having today, which is the unemployment claims. Now we're going to look at all of this and break down what each component means and how it's going to impact the market today. However, if you look at this here, 7 a.m. we had pound CPI coming out, and for the pound CPI, the print for this was positive. We had a market breakdown on Wednesday night, which we looked at the market and we sized up what to expect this morning, and the GBP CPI actually played out as expected. I'm going to link our Telegram channel in the video description, so you'll be part of our Telegram channel and be in the loop of all of these major analysis we do, and also signals that we share in the community. Right, now back to what we're saying now here. So I want to touch on this briefly before we go on to what we have for the day. So if we look at this now, I want to open this pound folder breakdown here to throw more light to what we are looking at, because it's also going to be something that is important for us as traders. So if you look at this, the data for the month of June, right? For the month of June, we had this guy as 0.0. That's what they are forecasting here. They are forecasting 0.0% change. However, coming this month, the forecast was now 0.2. Now, because of the forecast that we are having now, there's a slight change in the forecast. Initially, it was 0.0. Now they are forecasting 0.2. That means, based off the stats from the official national statistics for the UK, they are saying there's a possibility that things are going to look better. And if you look at the visual effect here, it says actual greater than forecast is good for currency, and we did get 0.4 as the print. And if you look at the data here over time, we usually get prints around 0.2 to 0.4 usually. So that's just a little bonus I wanted to add on here before we proceed. And we actually broke down this, and we're going to see the chart effect as well. So over to the main thing for today. Let's start off with the unemployment claims, because this is the major thing here. So for unemployment claims, right, we have the folder here. So let's take a look at what's the information here. So here, for the major information of what it measures, see the number of individuals who filed for unemployment insurance for the first time during the last week. All right, so this is how this report makes sense. Last week it was NFP was basically an announcement that is telling us that the US economy is having new job creations that has been put into the economy to make things better. Now, if the new job creations that was forecasted comes out as much better than what was expected, that's going to be a good sign. Now, that's going to be a very good sign for the dollar and also for DXY, right? Now, after this major news announcement, now we're now having the CPI release, which is today, alongside with unemployment claims. Now, for unemployment claims, this is basically the number of individuals that are filing for unemployment. Now, if you have lesser number of people filing in for unemployment versus the previous week, that's to tell you that the new job creations that was done, and those new jobs that was put into the economy actually took in more people, and lesser people was reporting that they are having unemployment claims, or like they are filing for unemployment rather. So this is the next important data here. So looking at this now, it says actual less than forecast is good for currency, meaning if we have, let's say, 230k people reporting for unemployment or filing for unemployment for the previous week, and this week we're having, let's say, 220 or 200k, that's to tell you that the NFP data that came out last week really did a good job, and you'll be expecting more strengthening of the dollar if the previous week you have NFP as a strong print in the market. Okay, that's what this is trying to tell us here. So if you go further, you look at this, and you can read through this, and you can also see that this is also one of the earliest economic data for the USD pairs, but sometimes it could be a bit lagging sometimes. All right, so moving on from this, now let's look at the data points. We're done with this section of the report. Let's look at the figures now. So for the figures we're having here, you'll see that the previous month, for the month of June, before we enter July, you can see that these are the data points. This is the data history so far. Now, looking at this closely here, let's look at the numbers here. So for the previous week, that's for the month of July, within 3rd of July, that's early week of July, we have the news data print as 234k, and the forecast was 234k, and actual came out as 235k. This is not good for USD. Basically, why? Because the actual was even greater than forecast. We need the actual to be less than forecast. Now for this week, we're having 236k as the current forecast. Now, having 236k as the current forecast, if you compare this to the previous data points that we have, or data release, you notice that there's an actual little bit of decline here, and we're going to be looking at a further decline when the actual number comes out. So we'll possibly be looking at figures around 230 ish and below that range. So away from this now, I believe this makes more sense. So away from this now, the next thing we want to take a look at now is the CPI M/M here. So if we look at this now, looking at this here, same thing we did earlier, I want to break down the data points for this side and also the data points for the numbers. So what we're looking at here is the change in the price of goods and services purchased by consumer, excluding food and energy. Actual data and forecast is good for the currency. So looking at this now, if we look at the data points before now, we'll notice that for the month of June we had 0.3 as the forecast, and the actual came out as 0.2. That's a decline below the forecast, and that was when we had DXY dropping hard, and also we actually treated this particular news release as of last month on our Telegram community. So this month we are also having 0.2 as the forecast, which is a figure that we're likely going to see slight behavior with what happened from DXY from the last month, which means this is actually not what is going to be the major mover here. The major mover here is going to be this and this that we're about to look at. So to look at the next data points here before we move on to technical side, we have this here. So let's just move over straight to the figures now. So if you look at this here, from the figures here, we have the month of June, we have 0.0 here as what we are having. Now we are forecasting 0.1. that is a change and an increment in the CPI figures, and it says actual greater than forecast is good for currency. So now with these major indications here, we're looking at a possible strengthening of the dollar and a major gain in DXY momentum. All right, so we are done with the fundamental side of things. Let's move over to the chart work. So on DXY we're looking at this here. If we look at DXY on the daily chart, DXY is currently trading around this range. As we're looking at it now, this has been the major level holding price, and we've been moving back and forth within this range. Each time we hit this low, we have this bounce off, we come back here, we bounce off, and we are here now. So what we're looking at here is a major strengthening of the dollar, and we are currently halfway into the highs that we have here, and also halfway into trading to the lows as well. So based off what the fundamental side of things is giving us the clue, we could possibly see the XY jumping to this high. Now one other thing to add on to this is when we throw in our Fibonacci 2 here, if you look at this, the retracement is due, and we're likely going to see that shift. If you look at this here, the DXY is currently trading around 104. We're looking at a possible increment in the dollar strength, and we're eyeballing around 105 to 106 level. So basically with our Fibonacci 2, we can see that price is currently within the range of 0.5 and 0.618 level, which is actually those golden ratios for Fibonacci, and this could possibly be that region where we have that turn to to the upside, for price to buy up to the upside. So this is on the daily chart, mind on the daily chart. So if you move down to the hourly chart now, you can see that currently price is still building up volume. The volume here is still being created ahead of the New York market open. So what we're going to see is price is going to take some time here to build up that volume before we see that major move to the upside. Now, because we are bullish on DXY, if we happen to see DXY collapsing or selling off, that's going to give us opportunities across pairs like Euro USD and gold. Those are the major instruments you want to pay close attention to. Now, like I said earlier on, you want to have an open mind to how this news release could go. If it goes as how we are seeing price currently lining up and hinting for a bullish dollar, we're going to see massive sell-off in gold. But then if this gets invalidated and dollar loses strength, of course gold is going to buy massively. So now I want to look at gold and analyze things to expect on gold. So over to gold here. Gold is already on my favorite for the day, and I will have gold also trading around a major key level between this market's low here, and also this structural high here. So you get to see that gold has been contained also within this range, and this could be something that could create that momentum for gold to trade out of this range. However, we're speculating sells here. So based off what we have here, this strong key level here, I'm expecting price to trickle back up here and sell off. Now while we're expecting this pullback to sell off, our major profit taking region are going to be this level here, 1, 2, and of course, because gold is a very volatile instrument, it could possibly even trade way below this all the way to this structural low. But all of these are yet to be seen. We need to be positive and realistic with ourselves, right? So looking at this now, what I want to see here is price should trade his way here, create this mini double top, the M style kind of formation, and then sell off. So that's my projection for gold. I'm expecting a sell off on gold. However, if this gets invalidated, what we're going to see is a total blow off of this major significant market high, and we could start creating new price action or structures around it. So if we drop down to the 1 hour for our areas of stops and areas where we want to get out of the market, we want to look at price breaking above this high as your deal breaker here. If we should break above this high aggressively, you want to stay away from looking for sales. We could start building major price action or structures to start buying. However, if we look at this, we still have enough time and space for price to trade its way up before we start engineering those buys to the downside. So that's my take on DXY. So for your stops, we want to have our stops just above this high when price gets to this region, and this will be our first profit taking. Our stops will be just above this high here. We want to use a good stop depending on your account size, right? Then this will be our first profit taking, and depending on the momentum, we could sell off to this level. But then let's be realistic with ourselves. We should look out for sell around this region. Now away from this, we want to take a look at Euro USD as our last instrument before we are done with this. So Euro USD, we're also looking out for sells on Euro USD. So Euro USD currently is trading around this region here. I want to see how price gets to this high to fill up this region before we start selling off. Okay, so if we drop down to the hourly chart on Euro USD, on the hourly chart you can see that price is actually slowing down momentum, and we are slowly trading towards this level here. So this is like a range. I won't want just to use that single line to identify this region or use that reference point. This could be much better represented with this tool here. So this is a range. We're expecting price to trickle his way up to tap into this region and look out for massive drop-ins in price. So to sum this up, basically CPI, we'll be expecting a strengthening in the dollar. However, we need to be open-minded. If this price action doesn't play out, we need to know areas for our exit, like we've been pointed on our chart. And also I'm going to be linking another video to this that will help you better understand how to trade high impact news. So until next time guys, cheers, keep it simple.